Everyone, welcome back. So SoFi is set to release their earnings on August 12th, and that's what we'll be talking about this video today. So SoFi, as I mentioned in my previous video, is one of the most innovative companies I have seen in the booming fintech space. They are doing things differently and are actually making it easy for consumers to save, invest, or trade. They're releasing their Q2 earnings, as I mentioned, on August 12th, and we will get right into what we should expect from earnings, and I will show you some of the trades that I plan on executing right after the earnings towards the end of the video. So stick around, as this is one of the best plays, and I would say that one of the most smart plays on this company in my opinion. Again, my opinion only, I'm not a financial advisor. And please note, this is for entertainment purposes only. Okay, so here's my screen. Now, I'm going to go over a few things about this company, but first of all, let's look at some news here. So, whole fintech space is booming right now. Traditional banks are challenged by these new state-of-the-art fintech companies, and media is taking a notice. So, if you look over here, there are few headlines that kind of made about SoFi. That's what I pulled. As you know, that fintech space is pretty hot. The recent purchase of fintech company by Twitter also made some headlines, and also the sheer awareness of stocks, crypto, and overall money management is making this space so much more approachable. So news like, over here, ahead of earnings, SoFi seems strong or is estimated to break profit in 2023, or things like just wait, SoFi will hit $20. So these are all bullish signs on a company and of course on the whole sector, because they are doing things very differently in 2020 and 2021 than in the last 100 years. So let's take a look at what I think SoFi is going to share with us in Q2 report. Now, I have covered this in my previous video that SoFi had an amazing quarter or amazing year where they had 110% growth year over year. This is really bullish for Q1 of 2021. Now, SoFi went public on June 1st via a SPAC merger. So technically, this is their first earning as SoFi public company. But let's look at what the company told us in Q4 of 2020 about Q1 of 2021. So in Q4 of 2020, they gave a high estimate of about 195 million. But in Q1 of 2021, they actually delivered 216 million of revenue, beating their own high estimate by almost 21 million. Now, in Q1 of 2021, they gave a high estimate right here that in Q2, they are going to do about 220 million in revenue. Now, there are few reasons where I think they will beat this, and here are my top three. Number one is reopening. So, as you know that most of the states reopen, and with reopening comes more spending. When people started to travel and go out, they need to make more money or they needed more money. SoFi is in lending business. So in my opinion, they made decent return on personal loans. Number two, schools. So schools open after a year, and SoFi is big on student loan. You can go check out their website. They have so many different types of student loans. So that'll definitely give them a boost as more and more folks taking loans for school, certification, etc. maybe became their clients or their customers, or if they were their customers for other loans, they started taking more on the school loans. Number three is mortgage. So right now, houses are being sold in record time. And since the interest rates are so low, everyone wants to take advantage, and which leads me to believe that their mortgage business is thriving as well. Now, these are just my observation, but looking at company metrics, which I'm going to show you on your screen next, right here, you can see that their product, services, and members are growing at a decent rate on an average of about 12 to 16% quarter over quarter, year over year. So I think they will blow past this quarter expectation as well and will give us a decent revenue. Now, this is a new company, so you really cannot ignore the net operating loss as they are expanding like crazy. So they will still lose money, and that too at a higher rate in my opinion. So they are not going to be profitable. As a matter of fact, Wall Street is estimating that they will be profitable by 2023. Which brings me to my next point, which is their growth is not being unnoticed. And what they are doing is not being unnoticed by Wall Street as well. There are only a handful of analysts covering SoFi right now, but they have a strong buy and a buy rating on this stock right here. 50% strong buy, 50% buy, giving it an average price target of about $27.50 right here, a high of 30, a low of 25, and an average of $27.50, which is amazing for us investors because right now the stock is trading at about $15. So you can imagine that 15 to even the low estimate of 25 is quite a bit of gain from where the stock is right now, and the average of $27.50 is amazing. Now that brings us to our next topic. Let's switch gears gears for a second here and let's talk about stock and how stock will react given the news or given the earnings report. So let's look at both scenarios. If Q2 results come out better than expected and stock moves up, then what will I be doing? I'm going to share with you, again, not a financial advice. I'm not asking you to buy anything or sell anything. This is me telling you what I plan on doing. So if the stock or if the Q2 report comes out to be positive and stock goes up, then I will sell covered call, which if I own at least 100 shares of SoFi, I can do that on SoFi for a month out. Again, because I know the stock will be up and the bull rally may continue maybe for a week or 2 weeks. So I will sell covered calls for a month out and take the premium that I can right now. I, of course, don't want to lose my share. So that's why I'm not going to go too close to the money. But of course, if the stock goes up by, let's say, $1, $2, I will go ahead and sell the covered calls, maybe $5 up, depending on how much premium I'm getting. So that's one play I'm doing. Also, depending on how much it goes up, I will buy some leap calls and take it through few days of bull run and get out for profit. As the last bull run, if you can see over here, lasted about 2 to 3 weeks. So that'll be my time to basically sell the leap calls the day after, as soon as the earnings come out, after the market settles down a little bit. And then I know for the next 2 or 3 or 5 or maybe 2 weeks, the stock will go up. I will buy the leap calls and get out before I see the chart dip, the MACD is coming down a little bit, the RSI is settling down. I will get out of it, making the most money I can from a positive Q2 result. Now, the next one. If Wall Street does not like the result, then we know stock will tank the next day. This is where I get super excited. Yes, I get super excited on earnings when they don't meet expectation for some reason, especially for growth companies like SoFi, and when stock tanks the next day. Because I feel that gives me a better opportunity to make more money because I'm still bullish on the company. I know company is going to do great. So in that case, what I will do is following. Again, my opinion only. So here's the trade I promised you in the beginning of the video. I call it mother of all trades because it's pure genius. I'll show you on the screen what I'm talking about here and I'll try to explain it. But please remember that this is options play, so it's risky. So please at your own risk. So what I'm going to do is I'm going to add to my already open position of cash covered puts for December 2023. Okay, I already have 100 cash covered puts on SoFi. I shared it in my previous video that I own. I'm going to add to my position, of course, December 2023 for 1750 strike. Then the money I will receive, because I'm selling, I'm going to receive the money. I will use that money to buy calls for December 2023 for 1750 again. Okay, these are leap calls. These are up in the future. So you know that by December 2023, this stock will be more than 1750. Just with the rate of growth that I have seen and just how bullish I am on this company, I know this stock is going to do well by December 2023. Okay, so let's see what's going to happen here. So I'm going to mark it here. So this is my first position here and this is my second play here. Okay, so now as you can see that first what I'm doing is I'm selling right here. So when I'm selling a put, that means I'm getting the money because I'm selling something, you get money. Okay, so now if I'm getting money and then when I'm buying something, which is right here, as you can see, I'm going to change a quick color over here. This is where I'm buying stuff, I'm actually spending money. Okay, so right here, so this one I'm getting, this one I'm paying. Equal. Now, when I'm doing this trade, this is called custom spread. When I'm doing this trade together, where I am selling something and I'm buying something, this is where it gets really beautiful on days after earning. And trust me, I have done this trade on Tesla, on Amazon, on Google. I do this trade all the time. So what's going to happen? Now, let's say if Q2 results comes bad and all of a sudden the stock comes down and everybody's like, oh my God, SoFi is not going to make it. The next day, the reaction, right? The bad reaction. At that time, what I'm going to do, the prices of this right here, this contract is going to go up because now they are saying, oh, we don't know if SoFi is going to be 1750 by December 2023. So all of a sudden, if I was getting $8, the next day I may get $10 for this trade. Okay, I'm going to mention it here. So I may get $10 for this trade right here. So I'm making $2 more for the same trade that I was making a day before. Now what's going to happen? The price of the call is actually going to go down because now all of a sudden they are going to say, oh, you know what? No, SoFi may not make it to 1750 and calls may be worth less. So for the same trade, I will be probably paying $5. Okay, for the same trade that I was paying $6.20, now I have to pay $5. Net, I'm going to gain a lot more in this trade. And look, right now I'm getting about 19,800 to keep. After selling 100 puts and buying 100 calls, I'm still able to keep $19,800. Market is red and SoFi didn't release good Q2 earnings. Then I'm going to tell you that this probably can pay me as much as 30,000, as much as that high. Because I feel that people will be freaking out and there'll be overreaction. I'll take advantage of that. In the next, I'm not saying I'm going to hold these till December 2023. No. I'm going to sell these out or close these positions. This one I will buy, of course, because I sold to open. This one I'm going to sell because I bought to close, or bought to open. So then what I'm going to do in the next bull run, I will get out of both the trades, making most of the money. This is only I'm doing if the market is down the next day. This is not a good Q2 return play. This is a bad Q2 return play. I love this so much because gives me so much time, because it's December 2023 and we know that after a few days of down market, because the earnings were not bad, investors, market realize, you know what, this is a great company. They still have 2 million subscribers or members. They're still, in all over the fintech space. They're going to do well. And then boom, the stock is going to go up. Now, when the stock goes up, this value is going to come down, which is basically beautiful because again, I sold something for higher. I'm going to buy it back at a cheaper, giving me more money. And this value is going to go up because I bought something for lower and now I'm going to go ahead and sell it for higher. So my profit on these will be much better just in a week or 2 weeks if I just hold on to these, and I plan on because I have a lot of time here. So this is really cool play and I really love this, and I always do that anytime a company reports bad earnings. Doesn't matter what the company is, of course, if that company is high conviction for me. I know Tesla or Google or Amazon. I don't do it on Apple because Apple is such a mature company and such a great company. That's where what I use to park my money, not to play and trade. So here it is, guys. I just gave you holy grail of all trades in just one line. Please understand that this is my opinion only and I'm not a financial advisor. I'm just telling you what I'm doing. Also, here's the link for my last SoFi video that I did a few weeks back. If you have not watched it, make sure that you click on this link and watch this video right now because it's going to explain you exactly what SoFi is doing in the fintech space. I hope I was able to provide you some value and hoping you like what I have to say. Please subscribe so you don't miss out future videos, and don't forget to smash the like button to help this video reach out to more SoFi lovers. Love you all. Thank you for your time. Until next time, you all have a sparkling day.